Hello everyone. Today we'll be exploring what a debit note is and how does it function in ERPNext. A debit note is issued by the buyer when goods are returned to the supplier due to issues such as damage, defects, or incorrect delivery. It serves as a formal request to adjust the amount payable and reflects the reduction in the supplier's account. By documenting the return, the debit note helps maintain accuracy and transparency in purchase records and supplier balances, supporting proper financial reconciliation between both parties. When a customer returns items to a supplier, they typically use a debit note for the following reasons: the products were flawed or damaged, they delivered the incorrect amount, they weren't what was ordered, or the cost was more than what was agreed upon. In addition to returning the items, the buyer also sends the seller this official document known as debit note, informing them that the items have been returned and the amount owed has been adjusted accordingly. How it works in accounting. Sending a debit note reduces the amount you owe the supplier by debiting your accounts payable, which is an entry you make in your books. The supplier, on the other hand, will receive this note and make the necessary adjustments to their records by lowering their revenue or accounts receivable. Debit notes are typically issued by buyers. However, they can also be issued by sellers to raise the amounts that a buyer owes. How to make a debit note? The user can make a debit note against the purchase invoice, or they can directly make debit note from the purchase invoice without reference. Go to the purchase invoice against which you want to issue a debit note. Click Create, Return. ERPNext will directly pick up the supplier and item details from that invoice. If you have already paid for the invoice in full or part, first create a payment entry for it. Then save and submit the debit note. Because you are returning the goods to the supplier, the system will automatically mark the invoice as a return after you click Save and Submit. The fact that the Is Returned checkbox is checked indicates that this is a debit note rather than a standard purchase invoice. How does it impact the ledger? In your accounting records, a debit note is used to undo the impact of the original purchase invoice. The quantities and amounts listed on the original invoice are deducted when goods are returned to the supplier. This guarantees that your expenses and stock levels are adjusted appropriately. Consequently, the updated financial position is accurately reflected in your ledger balances. What if no payment was issued? You can easily cancel the purchase invoice if you wish to return the items and payment has not yet been received. However, canceling the entire invoice is not the best course of action if only a portion of the goods, for instance 5 out of 10 items, are being returned. A debit note is preferable in these situations since it enables precise account adjustments without nullifying the entire invoice. Key uses of a debit note. A debit note tracks returns. It keeps a record of items sent back to suppliers, which helps during audits or reconciliation. It helps in financial adjustments. It ensures that your accounting system reflects accurate outstanding amounts. It serves as a proof of communication. It acts as a formal document to show that the supplier has been informed about the return. It supports credit notes. Often, after receiving a debit note, the seller issues a credit note as confirmation and adjustment on their end.